PipSnipers here, back for another update. Let's take a look at CRV over here on the daily time frame. And CRV has taken out diagonal trendline liquidity that we've used since April 15th to June 1st. So we took it out on June 4th and 5th. So anyone who was going long over here and placing their buy stops underneath the trend line, they got taken out over here. And then anyone who went short upon breaking below the trend line, they got stopped out over here. Right? So you take out both the longs and the shorts in order for the market to have a healthy move to the upside. You'll see this in every market, in bull and bear. And now all I would want to see here going forward is a daily close above the 38.2% fib at 0.724, found by taking a fib from this December high down to this March low over here. So if we get a daily close above 0.724, then it's very likely we'll move up to this supply zone at 99 cents to $1.07, more specifically the 702 at $1.04. And this is the same level in which we found resistance off of in December and January of 2025. So December 2024 and January of 2025, we dropped by a little bit over 67%. So there's no doubt that we're going to come up here and find resistance. You may even form a little bit of an inverted head and shoulders pattern and then move up to this higher supply zone that we've been using within our 1,000+ day long range. So don't forget that CRV has been ranging sideways for over 1,000 days now. Okay, so if we look here on the logarithmic scale, you see how many times we rejected off of this supply zone? Once, twice. This was in 2022. This was in June, July, August. This was in 2023 of February. And this was in December of 2024. So I think we're going to come up here, see a little bit of a retrace, but don't sell because I think it'll just be a partial decline before you have range expansion towards the 61.8% fib, found by taking a fib from the all-time high down to the all-time low. So that would be sitting at $4.24. Okay, now look now the 618 here at 424, that's right in between the 3.618 and 4.236 extension when you take a fib from the December high down to the March low, right? So it's likely price is going to come up here, oscillate, distribute a bit, and then see a move back down to $1.73 in the bear market. And it's not only fibs that's telling me this, but it's also just look at the chart and where it's rejected off of in the past, right? Big rejections off of this supply zone in the past. So coming up here and rejecting or distributing wouldn't be something out of the ordinary. It would be ideal to take profits here, not financial advice. But let's not rule out the possibility of a wick or even a move above the last all-time high. So that it would be a move above 670. We could definitely get that. But I want you guys to be safe and as conservative as possible. And taking a little bit of a closer look here, it does look like we're still within a wave 5. And we're grinding out this subwave 3 of 5. I'll show you guys here in a sec. Okay, so it looks like we're still within this wave 5. And we're just grinding this wave 5 out. It's going to be a wave 5 extension. And like I was showing you guys in my previous videos, this is just ascending accumulation. And I know a lot of Elliott wave guys who get stumped on the count because it'll look corrective and the waves will overlap. So that messes up their count. But people who've been in the market for a while, they know that this is just what's called ascending accumulation, where you oscillate back and forth, right? Waves slightly overlap each other, and then you have a wave 5 extension for range expansion. But yeah, this is what I would be expecting CRV to do. Hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out. Take it easy. See you guys in the next one.